There we go. All right. Good morning, everyone. Just getting things squared away here. Let people join in. I started a little early. All right. Welcome to the Hurley Investments Trade Findings and Adjustments of May 27th. Good to be with you guys this morning. Just kind of have my last week's writings up here. Talked a little bit about puts as insurance and the frustration of, sometimes they just cost money, kind of like insurance. We kind of related it to car insurance a bit. And really, you have it there, so it's there for the big things, not necessarily the little bumps and fender benders, because that just increases your insurance cost. And what it's really there is for those big accidents, car crashes, stock crashes, and I really like this. Don't try and trade your puts, look for the risks and protect with insurance. It's really easy to get caught up trying to pick the tops, pick the bottoms, try to I guess game your stock position a little bit. It's really not what we're trying to do, and it's not what you should do if you're collar trading and using puts for your portfolio in your stock positions to protect them. You're really just looking for a number of things. So if I'm going to follow up with this, let me erase this. What are some of the risks you guys, erase the bullet, and I don't mean specifically, but generically, what type of risks are worth protecting your stock positions for? Should we look to protect stock for? Got a couple of answers. Wait just a second to see what else we got. All right, we got a couple from Jose. Earnings. Right up there at top. That is number one. All right, another one. Biden for president. Okay. That's kind of a long-term one. But maybe, as hilarious as that is, we can put some sub ones. Biden for president. Tax increases. What other things are we worried about with him? Just on this sub note here. Jose says again, zombie apocalypse. All right, Jose. We get the point. I'm going to totally butcher this. Oh, there we go. Government. I'm going to add spending. Okay, those you really can't time. Kind of just got to keep an eye on them. They're risks. Zombie apocalypse, maybe, you know, I'm not going to say whether that's high on the list or low, but certainly it's there. All right. What are some other things? David says market uncertainties. Such as zombie apocalypse. That's an uncertainty. So this one, I'd say, kind of changes from time to time. Last year, the uncertainty in March and April was how long this pandemic was going to last and how it would affect everything. Certainly, there's some lingering uncertainties there, especially with, you know, as other countries come back online and start getting back to normal. Are they going to be able to buy American products and things that we want to sell everybody? Or are they going to be kind of hurting to get back to normal economically? So pandemic, I'm going to say these change from time to time. Time. All right. So I'm going to add this year a couple things, but I'll say global maybe I'll just say other countries economies lagging. from the pandemic recovery. This is also of this year. And this is a comment, another comment from David. Inflation. And really, we could put Biden for president in market uncertainties. Inflation. Kind of goes along with that. Value the dollar, value of the dollar. Kind of the same, part of the same thing. All right, so anything else? What are some other things? We've covered much of market uncertainties for this time frame. Certainly taxes and the worry there has been some percentage of why our markets have acted the way they have this first part of the year. So I'm going to add for myself employment recovery. All right, what are some other things that we need to protect for? Earnings, number one. We've got a whole lot of market uncertainties we're looking at. There's not necessarily something ahead of time that we can kind of protect for, unless it's maybe a employment number or economic numbers that we can kind of look at from when they're going to report. But usually in those circumstances, we do have some portion of or some stock protected. For employment, those could come in either way, like last time was somewhat of a surprise to see it not grow significantly. And that's basically due to many people would rather not go and work if they're getting unemployment checks that pay them nearly or the same amount than if they went to work. So disincentivized to contribute, and that definitely played a role in recent numbers for employment. But I don't know that will always last. We'll see. All right, some other things I'll add. First, a little laugh out loud, so when this gets posted, nobody thinks it's serious. Although it is serious, it is a concern, but it's also kind of funny. All right. Technically speaking, I'm going to add support and resistance. All we're doing again is with technicals, we're just trying to see where people are buying at what price and where at what prices people are selling. That's really all that the technicals and charting is. And that's really all that support and resistance is. And it's also herd mentality. I'll say tracking herd mentality. So, did I miss anything else? And really, it's a combination of some of these things. No one of them is really going to tell us everything we need to make a decision. If we have news reports coming out, I should probably add that. News. Then we're going to need to look at it in conjunction with a support and resistance. What has sold off lately and then recovered? Let me go to Under Armour. Had earnings and a bit of a sell-off. Came down to a pivot point. Excuse me, not a pivot point, but a support level across several months down here at 21 and change. So in this instance, as it came down, and actually this I think was probably earnings May 6th. That's probably, I'm pretty sure what the earnings was. So it came down, tried to test the 50-day and came down again a little bit to test a support level. So at this point, we might have just waited just to see if it would hold before adding protection back on. Just off of memory, I think we took it off and put it back on and then took it off again as it came down to a support level to see if it would bounce. And yeah, so a support level was used in conjunction with earnings, which earnings were awesome and really just came down on reports that they're going to be paying employees more, and market doesn't like higher expenses, so came down a bit even though they had an amazing earnings, but it held a support level. So at that point we have some confidence that we can take protection off, or if we missed a bit of a drop, we can wait and see if it holds a support level to then see something like this where it bounces right up. And now we're looking at the next resistance level here at the 50-day, and to see if it can outbuy any sell orders stacked on a 50-day resistance, and we'll see if it gets above it. All right, so that was kind of my follow-up, I guess, from last week's discussion. I hope that helps give you an idea of what we're looking at and trying to do every day. So used in conjunction with charts. All right. Any questions so far, guys? Anything that you would add that maybe I missed? All right, so I'm just going to go through a couple things. This was targets from last time. That should be looking nice if you did that. So I'm going to get rid of that. Jose says wars. Did I miss wars? I'm going to say wars. Definitely. Jim says court challenges against big tech. And actually, I'm going to move this down here because news definitely creates market uncertainties, but this is more news and not necessarily economic reports type thing. So we have a bit of a war going on in Israel. That's a recent issue. Jim says court challenges against big tech. So Jim, let's do an example of that one. Right now it's Apple with their, what is it, Epic Games, I think. They're challenging, or Epic Games is taking them to court. So I'm not sure, but possibly some of this decline was from that. I guess I don't know exactly when that court case came up, but it's been talked about for a while. So if you take that, it's kind of an ongoing thing right now. Maybe that's contributed to some of this, you know, bouncing back and forth in the sideways, and not really taking off, especially after a fantastic earnings report, right? Where they made record amounts of money. But if I'm kind of weighing all of the problems together, I really just see this more as bouncing between two big technical support and resistance levels there at the 250-day, and the fact that we still need to find a lot of buyers for Apple because everybody freaking owns it already. All right. Jim followed up, Facebook regarding censorship. Yeah. So what is there recently? I'm trying to think. I don't think there's, to my knowledge, court cases ongoing right now. Big tech mergers. EU prepares new rules, but 3 countries want more control. I'm just kind of looking over my latest news. In fact, we can just go here. Check out Facebook. Facebook looking awesome today. They're no longer banning ports, calling coronavirus man-made. That's just kind of funny. It talks about Amazon. So UK starts media watchdog. Maybe I would check that out. Anyways, I think this is a good spot to kind of go through. I like how FinViz just shows you the time and date of all sorts of different news coming out for any specific stock. Let's see. Facebook set for antitrust investigation over marketplace platform. That's when I would check out Jim. Facebook faces antitrust probe from EU. That was all just yesterday. But where are we at right now? Certainly doesn't look like those are big enough news events to bother us from the last 3 weeks or so. I'd say this little sell-off here was just being pulled down with the market in general. Go back to S&P. That's really what this was. 4230 all the way down to 4050-ish. So anyways, I guess I'm rambling a little bit, but I'm just trying to show you how I might go through, Jim, some news events and see whether or not they've affected recently. And for Facebook, it doesn't look like it has, but certainly something to keep an eye on. And for our big tech, it's definitely antitrust. Which is what Apple is dealing with Epic Games, which is what has plagued Facebook for the last several years. Regulation. You could count pretty much on any big news report coming out that Facebook would fall significantly on an antitrust probe or an antitrust this or that, where you could buy the dip and it was more of an opportunity for some returns from buying a dip. So just some thoughts there. Moving along. So I've thought a bit about some possible trades. We've got a holiday weekend coming up. I would suspect a lot of big money is already out of the market and really not going to help us. So for the most part, I'm not really interested in doing a trade, but would like to keep an eye on for later today for some people. 85 long leap calls on Micron. See if they can't get up to 95 or 100. and really it's just following the amount of money that's going to be injected into our chip stocks from the government and how that could boost them. I do wish we would have looked more at it around 75 or closer there, but we do have a bullish streak here, and still definitely room to run a bit, a couple dollars to the 50-day, but really long term, we're looking at seeing them get back up to 95 and kind of shrugging off the whole chip, I guess, back order whatnot. So I'd be keeping an eye on Micron and looking at maybe end of day to day to see if they can hold most of their gains, or looking at it tomorrow, see if we get a little pullback on this general bullish run. Looking at January 23, leap, long calls, 85 strike. I realized I don't have my E-Trade up, but let's see if I can get it. Bear with me just a moment. Okay. I'll definitely say this one is speculative for sure. So definitely keep that in mind. Get rid of some of these. January 23. I'm struggling for internet here, but come on, you can do it. Looking at 85s. Oh my goodness. My internet is struggling. Come on, little fella. You can do it. Okay. All right. 85. No, not 77s. Keeps updating on me. Hear my computer starting to crank up the fans, working so hard. But I was looking at January 23, 85s. And I like the idea of a couple if you can do that. 2 shares that way, if it gets up to, 90, 95, you can take one off and let one run to see if it gets up to 100. And as always, leaving yourself the time, which we've got here, and the space in your account that you can dollar cost average if this comes down and is sold off for half off to buy some more. So that's what I would look at. just take a picture here. Somewhere around 17. And again, speculative, and no reason why you can't be patient and just wait later today or tomorrow or next week. Because as I said, big money is out, and they're certainly not going to help us if they're out. Thoughts or questions on Micron? Besides that, I mean, I just wanted to kind of go through. I talked a little bit about Apple already, kind of stuck between this range, and we've got 125 puts just for portfolios that, you know, are just sitting there. We really want to just see it confirm a, you know, that it's going to break that resistance level, and it certainly has not. So there's not much to do there until something changes. And similar situation for Baidu, just holding on to protection as it's tested this 200-day and just hasn't bounced up above it significantly, at least in terms of how Baidu sometimes moves. It's almost, well, it's about $4 off of the 200-day, which seems significant, but maybe not so much for Baidu. So just holding on to the 200-day, and we really just got to see if it takes up all those buy orders and falls, or starts to get some more buy orders to head up. Ida asked, is AMD Micron's competition? So AMD does more of the graphics cards. AMD is NVIDIA's competitor. Micron in the chip industry is focused on DRAM and NAND. That's just memory, storage, that kind of thing. Not necessarily the processing power like graphics cards might use. So I mean, I guess they're sort of competitors, but not really. It's more NVIDIA and AMD, Ida. Continuing on, just to give you some more ideas, or not ideas, but information on what we're looking at. Boeing, definite and huge buy-in to break over that 50-day, hugely positive sign. And very nice to see, especially for us, that we've got so many darn leap calls. We've got shares that have no protection. So great scenario for Boeing. I bet you it'll come back to test the 50-day as a support now that it was resistance. But that's kind of how it goes, and that just means that, you know, we get more buying to have it bounce and continue a trend upward. Bank of America, banks have kind of been stagnant around that 42 range for nearly a month now. Same with JP Morgan, some degree. They had a good run the last few months. Definitely a month and a half or so of being stagnant, but man, those banks have looked great for us so far this year. Some other ones, let's see, I looked at Under Armour briefly with you and just kind of waiting to see if we can get over the 50-day. Love to see it continue. For heaven's sake, it's, if they're going to pay people more, maybe that means they'll get better employees to give better sales in their stores. Let's see. Visa's one that we don't talk about too much anymore. Not necessarily a reason why, it's just kind of a boring stock that's boring until it's not, and it's awesome. And definitely good to see a bounce on the 50-day. And I think it'll just be another summer doldrums type stock that doesn't move a whole lot through the summer, and it typically doesn't. And for the most part, we're kind of out of shares and just on leap calls for taking a big profit on shares. Months ago for Visa, or a month or so ago. What else? What am I missing? Ida asked, anyway, special way to play options for NVIDIA's 4-1 split. So we kind of did that similar thing for Apple, and basically what it came down to was it was something to look at after the split, because it usually, let's look at NVIDIA. You can do some things up to the split. Trying to remember when they announced that, Ida, a few days ago, so I'm sure some of this has to do with that. But basically there's it's kind of like earnings. It will typically run up to the split. At the split, it will usually sell off the day after. And what we tried to do with Apple was get rid of a bunch of calls and take profits on a lot of things the day prior to the split, and then tried to see where we could get back in right after. I mean, and for Apple, it won't be just going off of memory and what we did. It kind of didn't do exactly what we expected, but it kind of did. Let me go back. I can show you what I'm talking about. I don't know if a year is even enough. Yeah. So this end of the summer, I think, is where it happened. And it was like something like, let me zoom in, around here. And then the day after, it just went up huge. And then a couple days after, finally started to sell off. So this is post split right here. So if Apple's anything to go off of, you'll definitely want to look at the run to it. And if you've missed that, just look for right after to see where you can't find a support level if it falls to buy back in. And you can kind of do both things. Maybe could have Kevin go over that Monday more on the splits. We went over that in detail and how it doesn't, option wise, it doesn't really help you because your options get split, and it doesn't really help in that regard. Maybe that's something for Kevin to talk a little bit about on Monday. I'll let him know. But NVIDIA, And it's kind of interesting to see it go sideways for so long after it's just always gone up for large amounts of time. Other problem with NVIDIA is it's just very overbought. It's very overvalued at this point. So they can't necessarily justify being traded at a high valuation like a lot of tech stocks are. It definitely doesn't work out when they've got more costs or when other things don't work out for them. And thanks, Ida. Yes, Monday is Memorial Day. So I'm guessing Tuesday, but keep an eye out for an email from Kevin. Ford, that's what I wanted to talk about. Freaking awesome. Finally, let me get back to 6-month chart that we can actually see here. It is making moves that we have wanted it to make for a couple years now. And definitely something to look at for maybe some 15 strike leap calls sometime. It is overbought. Can't hurt again to wait, but those are fairly cheap. I'd go out again to January. This would actually scroll for me. January 23, I mean, they're $3 for 15 strike. 325, 330. Definitely something to keep an eye on. Take a picture of these guys. I'd think it's got to have a pullback at some point. It's kind of struggling to get over 15 today, but you know, maybe I'll have a couple days like this or whatnot that'll have a little pullback that you can try and put those on for. But really, it's the next stopping point is really 1750 of long-term resistance level. So there you go. Not a bad deal. In fact, if I had to choose between these two, I like Ford a little bit more. Any questions, guys? I really, that's really kind of it. The reason Ford's starting to take off is because they came out with some news that they're going to try and shoot for, I think they said 40% of their fleet to be electric by 2030. And you start saying anything about electric cars, and the market just falls in love and goes crazy and irrational and starts buying whatever it is that said the word electric. But if that's what it takes to get a little love for our Ford, then I guess that's what it takes. And I'm fine with it. Any other thoughts, guys? Questions? We'll get this posted. Hopefully this was helpful. Your two trades here to keep an eye on. And that's really it for me. Yep, no problem, Jim. Thanks, guys. Thanks, David. Jose, thanks for the laughs. Not seeing any questions come in. Guys, I really appreciate it. Thanks for joining me again this morning. And we will see you next week, probably. Tuesday, most likely. Look for an email again from Kevin. But Monday, canceled. Thanks, Ida, for the reminder. And we'll go from there. Thanks, Ida. Same to you. All right, guys, take care.